Hi, my name is Alcanne Houtzaager and I vlog about impact investing news blog, a Dutch blog, and I'm blogging in English to open up the content because a lot of the articles and reports that I review are actually in English. So on the blog you will find the links to the original English articles. This is the blog for Impact Investing News April 1st. And it's a little bit different because actually it starts with the Dutch version of an English pulse that I published on LinkedIn about the ideal inclusive impact investment product. And that article was inspired by Brian Trelstead, who works for Bridges Ventures US. The company originates from the UK, where it's a well-known social investor with an interesting track record, and founder, Sir Robert Cohen. They published a 10-year report, lessons learned. It's very interesting. If you Google that, you will see how they have been working. They have a couple of investment funds now. They work in poorer sectors of the UK. Brian introduced impact themes. He wrote an article for Harvard Business Review in January, the 5 P's of impact: place, product, process, planet, and paradigm. A place, obviously underserved and poor communities. The product, which is either an available, affordable, basic need or impact catalyst product. The process has a lot to do with corporate social responsibility and sustainability. A planet is about whether you're using resources, whether they are renewable, and if they are not, are you recycling them? And the paradigm is an exciting one for investors. It's about disruptive change, and if you can find an impact catalyst company, are you in fact investing in what's going to be the next Apple, as in the largest company of the world in a couple of decades? If you think this is a bit much, you can always check out Abigail Noble's framework for families, because she also puts SRI and ESG integration in her framework. Now, inspired by Brian, I came up with the ideal inclusive impact investment product, and it is actually PRICP. The price should be affordable, especially in bonds, a nominal amount of, let's say, 1,000 euros. It should be public. That is either listed, because that makes it liquid and more transparent. But also crowdfunding for impact offers a lot of opportunities for small impact investors, especially in my country, the Netherlands. The Authority for Financial Markets is regulating the crowdfunding platforms, and we have a couple of dozens that adhere to their regulations, which is also evolving over time. The return of such an impact should be risk related. There shouldn't be an impact fee for the company offering the product. The impact itself should obviously be measured and reported, but I would also like to see an impact incentive, which is a characteristic inspired by the social impact bonds from the UK, where private financiers pay up for social impact projects, and when impact is achieved, it's the government that repays them, but it gives them extra return if extra impact is achieved. And it would be great if you find an impact investment product that also has such an incentive. Who's going to be the person to pay the impact bonus? The return bonus, of course, is a big question. Now, if we can somehow introduce it into the green bonds, the climate bonds system, that would be a big step ahead, because we only have about 200 million US dollars in social impact bonds right now. 56 are operational and probably about 100 are in the pipeline. But if you're looking at the green bond universe, we're talking about 600 billion US dollars. So if they can somehow introduce an impact catalyst, that would be a major step forward. Since we all have these wonderful goals, then maybe governments or a special fund can somehow pay extra for extra impact. And then the last letter in my pickup is catalyst. Are we investing in an impact investment product that is delivering additional capital, as in the whole project wouldn't get started or wouldn't be able to evolve into a next phase without our capital? It's an argument that was very valid in impact first, early impact investing, also in philanthropy. You know, large donors, they like to make a difference, so that's why they are always interested in additional capital. And the other characteristic would be just, are we investing in upscaling? If there are a lot of impact initiatives going around, are we making sure that we are putting our money in the most successful ones with the biggest potential to go global? And you find the English version, the long version of my ideal inclusive impact investment product on Pulse, as I said. Then I also looked at a paper published by an Amsterdam asset manager, IBS, and they published a green paper based on their value strategy. They looked into sustainable investments because there is really no argument not to invest sustainably, and there are many arguments to invest in value strategies. They looked at the results of different portfolios, 40, 20, 50, 100 sustainable companies, and the results were actually very good, and they were better than MSCI developed countries return. They even looked at the infamous barrier, used to be Vice Fund, which invests in what IBS calls bets and butts and booze and bombs and tobacco. The graphs, the paper is in Dutch, but the graphs, you know, you can read them. They're on SlideShare and you can find them on the blog. And then there is a lot of sort of small bullet news. I had a lot of backlash in my blog folder. We saw two interesting inclusive impact investment instruments. A Dutch investment giant, NN, launched a sustainable bonds fund, and a global investment giant, BlackRock, iShares, launched an exchange-traded product for sustainable bonds. We have good news from Oiko Credit. It's one of the largest funds in the world for smallholders and SMEs in developing countries. They grew 23% last year. And one of our larger Dutch banks, ABN AMRO, said that their sustainable assets under management grew 19%. It's 6.3 billion now, and 1 billion of that is actually traded directly by the owners, so active traders. And I think that's a lot, 50%, but I don't know if that's a lot. But of course, sustainable universe is quite transparent, so it's easy to do it yourself. I invest with ABN AMRO myself, and it is easy to do. In inclusive impact investing, FMO, the Dutch Development Bank, announced that they are checking out whether high net worth individuals are interested in a fund to participate in. But you know, they have bonds, and it would be great if they had, you know, 1,000 euro nominal bonds, so then everybody could join. Then we saw the launch of Convergence, which is a platform originating from the World Economic Forum in Davos, and you will find large deals, you know, as in the millions, 50 millions of well-known impact investment pioneers. In transparency, we saw MSCI launch their ESG ratings of 21,000 funds. Morningstar did it for 20,000 funds, but MSCI also had 6,000 companies surveyed by their ESG analysts. So that's a little bit more than the 4,500 that Sustainalytics looked into for Morningstar. In green bonds, the USA saw the launch of a green city bonds coalition. In the UK, we saw the first city green bond, and it's a retail bond in Swindon, so the Swindonians can invest in their city's first green bond. We saw a first green bond for South Korea, which in a way is remarkable because Korea has many companies in the Dow Jones Sustainability Index. So they are a little bit late in joining this green bond market. And the Climate Bond Initiative is very enthusiastic about a McKinsey report on green infrastructure financing. Then in the UK, we saw a charity bond for the Charities Aid Foundation. They were going for 10 to 20 million UK pounds, and they closed early with 20 million UK pounds. So very good news. And the government actually reserves 110 million UK pound for homelessness, mainly in London, and the social impact bond is their preferred financing instrument. We saw the first three development impact bonds for South Africa, for poor women and children, and prevention. Together the budget is 25 million Kruger Rand. And EFPA blogs about the European Venture Philanthropy Association, blogs about the first development impact bond in India, which is an education project, and it wants to make sure that Indian girls also go to school. When we talk about upscaling impact investing, Ben Goldsmith, who launched Ben Hedden Capital and is actually listed on the London Social Stock Exchange, is very critical of traditional investors and very optimistic about new generations investors. Read the quote, it is exceptional. And we saw Fran Siegel, who is an impact investing heavyweight from the US, impact assets, and a professor. She wrote about the key players and their role and activities to upscale impact investing in Conscious magazine. In Facts and Figures, we saw Big Society Capital. They researched the social investment market in the UK, which is now 1.5 billion UK pound, which is £500 million more than the Boston Consulting Group guesstimated for 2016 a couple of years ago. One of their large intermediaries, Clearly So, say they just passed the 100 million barrier for intermediating in social investments. From German-speaking Europe, we saw for the first time a decline in sustainable assets under management, not for microfinance and exchange-traded products, but those are still marginal sectors in sustainable finance in German-speaking Europe. From the United States, US CIF published their numbers for 2015, 15% in the US, up a little bit. A chapter on impact investing is not transparent, unfortunately, and it's a lot about millennials driving growth. Then CS Monitor published an article about if you have $20 US, you can be an impact investor, which is sort of an April Fool's joke because it's really only the 20 US that you need to invest in a Calvert note, and all the other deposits and bonds are 1,000 US dollars deposits. Thought pieces from FSG, which is the consultancy launched by shared value guru Michael Porter. They wrote about integrating impact goals in company strategies and about international non-governmental organizations achieving impact through different roles they can play. In policy, Wharton University wrote about two federal regulation barriers having been removed for impact investing. And in academia, the Stanford Social Innovation Review had Judith Rodin, the CEO for the Rockefeller Foundation, who of course is an important player in impact investing. They have the Impact Investing Initiative and they are important gin players. And together with Brack, an impact investing pioneer, she blogs about innovation, and that is very hard work. And that's about it for this time. Please check out the blog, please like, please share, and I'll see you next time.